Hi, and welcome to Section 1-3, How Transactions Change Owner's Equity in an Accounting Equation. In class today, I introduced you some new account titles that we have not seen before, so I'm going to briefly discuss those before we move on to the work together for Section 1-3. The first account title we learned today was Accounts Receivable. Accounts Receivable is the opposite of Accounts Payable. Accounts Payable, we learned, was a liability when we owe someone else money at a later date. But in this case, accounts receivable is an asset. This means that a customer owes us money at a future date because we sold them goods or services that they purchased. We need to keep track of this because eventually they will pay off their debts, but we need to make sure that that is something that they do. Revenue. Revenue is also a form of owner's equity. It is recorded at the moment we sell goods or services. And this will happen in two ways. We might receive cash from a customer for revenue, or we might provide them the goods or services today, but they're going to pay us later. So we might have sold services on account. When we sell services on account, they're going to pay us at a future date. But if we receive cash for selling services, that means that we receive that cash at that exact moment. In either situation, we have to record that revenue the day we sell the goods or services, whether we're receiving the money that day or a month from that. It needs to be recorded at that moment. The next account title is expenses. This is another form of owner's equity. Expenses are used in the operation of a business. You might see a repair bill, a telephone bill, charitable contributions, things along that nature. And expenses are only going to subtract from owner's equity, so you never will see an expense that increases owner's equity. Withdrawals, another form of owner's equity. A withdrawal is very similar to a bank account. If you ever go to an ATM machine to take money out of your own bank account, it reduces the amount of your balance. Similar situation here. Withdrawals are used when a business owner removes money from their own business for personal use. Really what they're doing is they're paying themselves. Okay? And this will only reduce owner's equity. Withdrawals will never increase owner's equity. Okay, so now we're going to move on to the work together for section 1-3, and the instructions are in your textbook on page 17. You'll notice that the accounting equation is still at the top, and then we have a list of account titles on the second row down. One new account title appears on this, and that is the accounts receivable. Okay? Capital, which is all the way on the right, that is where we're going to list any revenues, expenses, or withdrawals. All of those will fall into that one single column. So let's look at the first transaction. Received cash from sales. Okay? Received cash, that is an increase to cash. From sales, sales is a form of revenue. Okay? The word sold or the word sales both refers to revenue. So in this case, received cash from sales. Cash is going up because we received cash. When we make a sale, that only can increase our revenue, so our revenue is going to increase. Okay? So we have a plus on the right, we have a plus on the left. We know that means our accounting equation is in balance because the same thing happened to both sides. The second transaction says we sold services on account to Bowman Company. Okay? Sold services, that is revenue, that is increase to revenue. It says it's on account. That customer is going to pay us at a later date. So looking at the top there at those account titles, we can see accounts receivable falls as an asset. Whenever a customer owes us at a later date, we're going to increase their debt to us. Therefore, accounts receivable has increased because now they owe us more money. But because we sold them something, we've increased our revenue in the form of capital. So once again, the right side and the left side of the accounting equation were both increased, same amount, therefore the accounting equation is still in balance. Transaction 3 says that we paid cash for a telephone bill. Okay, a telephone bill is a form of an expense. So paying cash, that is a decrease to cash. We paid it because of a telephone bill, which is an expense. Expenses, as I mentioned earlier in the video, only decrease owner's equity. So paying cash, that's a decrease to cash because we paid it for a telephone bill. That's decreasing our owner's equity because it's an expense. So that decreases capital. Same thing to both sides. Left side decreased, right side decreased. That's an even playing field, so therefore the account equation is still in balance. Moving on to line 4, transaction 4. Received cash on account from Bowman Company. What this is telling me is that in the last transaction, or the 2 transactions ago, we sold services on account. Okay, now they are paying us back what they owed us. So receiving cash, that means an increase to cash. On account, what they're doing is decreasing the debt from earlier in transaction number 2. So in this case, receiving cash increases our cash, but because they're reducing their debts on account, we have to decrease accounts receivable because they owe us less money because they're paying us back. We don't know in this situation if they paid off their entire debt or not because there's no dollar amounts in these transactions. So in the future activities, just kind of keep in mind that sometimes, but sometimes not, a customer may pay off their entire debt at one time, or they may just pay it off in increments. But because this only affected the left side of the accounting equation, we had an increase and a decrease of the same amount. Therefore, it kind of canceled itself out, so to speak. So the account equation is still in balance. Transaction 5 tells us that we paid cash to the owner for personal use. Again, this is when the owner is trying to pay themselves. So paying cash, that decreases our cash. We're giving it to the owner for personal use. So it's like the ATM machine. It's a withdrawal. Okay, so both situations are a decrease. Paying cash, our cash decreased. To the owner for personal use, that's a withdrawal. That decreases our capital. So both right and left side had a decrease of the same amount. The accounting equation is still in balance. Okay, so the next activity that I assigned you today was the 1-3 application problem on page 20. So if you're looking at the directions on page 20, this is very similar to like what we just did, but instead of using pluses and minuses, now we're using dollar amounts. Okay, so we're going to do a few together, but then I'm going to let you go on and finish the rest by yourselves. But let's kind of get started first together with transaction number 1. Transaction number 1 says received cash from the owner as an investment. Actually, I'm looking at the wrong page. Lower on the page, in the directions on page 20. I'm sorry about that. Transaction number 1 says we're paying cash for rent for $300. Okay, rent is the form of an expense, and it says we're paying cash for that rent for $300. So we're going to, not only are we going to reduce cash, we're also going to be reducing our capital, just like we saw on the 1-3 work together. So in this problem, we have existing balances. Back in application 1-2 and 1-1, we did not have any prior existing balances, but in this application we do. So we have to keep note of that. So, paid cash, that's going to decrease our cash for rent, which is an expense. Okay, so you'll notice our cash decreased by $300, and our capital also decreased by $300. Notice that the word expense appears as a title, as a label, and we need to make sure we label everything that affects our capital because we're using this column for multiple reasons: expenses, withdrawals, revenue. We need to remember what the activity itself was. So in this case, expense was the label that needs to be written onto your activity. Okay, our next transaction down says paid cash to the owner for personal use. Okay, so once our balances have been updated based on what happened in transaction 1, you will notice that our cash decreased as well as capital decreased. Everything else, the balances remain the same. So transaction 2 says we pay cash to the owner for personal use for $150. Paid cash, that decreases our cash. To the owner for personal use, okay, they're paying themselves, so it's like a withdrawal. So that's going to decrease the capital. So our cash went down by $150, and our capital decreased by $150 as well. Notice the label that's there, withdraw, because it's a decrease given to the owner. They're paying themselves, so whatever they're going to do with that money, we do not know, but we have to show that as a withdrawal. So that's a decrease to both sides. Our account equation should remain in balance, so we're going to update our balances here. Our cash decreased, was $325, now it's down to $175 because of the $150 that we subtracted. And the capital was $800, now it's down to $650 because we reduced it by $150 for that withdrawal. Moving on to transaction 3, received cash from sales for $800. Received cash, that's an increase to cash. It says it's from sales, that's the form of revenue that will increase our capital. So let's show our cash increasing by $800, our capital also increasing by $800 in the form of revenue because it was a sale. So both sides were increased by the same amount. That should indicate that the accounting equation is in balance, but let's go ahead, update our balances. Our cash increased up to $975. Our capital also increased, this time up to $1,450 because of the increase of revenue of $800. Looking at transaction 4, paid cash for equipment repairs, $100. Okay, paid cash, decreased to cash. For equipment repairs, that's a form of expense. So that's only going to decrease our capital. So our paying cash decreased cash by $100. Our capital is also decreased by $100. Look at the label, expense. You have to make sure you label all forms of capital. Both sides went down by $100. So we update our balances. Cash is now at $875 because of the $100 decrease. Our capital is now at $1,350, also because of the $100 decrease. Both the left side and the right side are equal, so we can move on to transaction 5. And this is the last one we will be doing together before you do the rest on your own. Transaction 5 says we sold services on account to Lisa Lee for $400. Okay, so we made a sale. We didn't collect the money today, though. We're going to collect that money at a future date. But we have to indicate, we have to record that sale now because it happened today. We will record that receiving of cash at a later time. So right now, sold services, we know that's going to affect our revenue. That's going to increase our capital in the form of revenue by $400. But now we have to figure out what else is going to happen. Accounts receivable, because it's going to be on account. Lisa Lee owes us at a later date. Because of this, we need to increase what she owes us. Her debt to us has to increase. So looking at your screen, you'll see that our accounts receivable, money that we're going to receive at a future date, has increased by $400. We sold a service, that's a sale, it's a form of revenue. So our capital has increased by $400 at that time. So we're labeling this as revenue. So we have an increase of revenue by $400 on the right. We have an increase to accounts receivable. The debt that Lisa Lee is now in with us has increased by $400. So you will see future transactions where eventually Lisa Lee is going to be paying cash on some of that debt. So eventually you're going to decrease your accounts receivable. I'm noticing that I had that in transaction 7, there is a charitable contribution. Keep in mind, that is a form of an expense. So when you get to that, that is a form of an expense. Make sure you're labeling anything that's affecting your capital, your owner's equity needs to be labeled as either an expense, withdrawal, or revenue. Okay, you got to keep everything separate so we know what's going on, so we don't forget why we increased or decreased our capital. Okay? So I'm going to let you guys go ahead and work on transactions 6, 7, and 8, and we will go over our answers tomorrow in class. Have a great evening, everybody.